Talking to you. Thank you so much for joining us on the show today. All right, moving on to our second newsmaker tonight. The world's top oil-producing nations have decided to stay the course and keep oil production high. The move is being seen as an attempt to squeeze high-cost producers out of the market. Oil prices have been softening after that decision was announced. And if we can just check them now, there's about a 0.5% decline on Brent. NYMEX also trading just below $58 a barrel. Now, the cartel will continue to produce 30 million barrels of oil per day. OPEC believes that global economy is recovering and that demand and supply equation remains healthy. To discuss that OPEC meeting and its consequences, I'm now joined by Bob McNally. He's president of the Rapidan Group, and coincidentally, he happened to be in Vienna for that all-important meeting. Bob, thanks so much for taking this call. Good to have you on the show. What's your first thought? I mean, it went as per script. Your thoughts and your first reactions?
Well, it's very good to be with you, and greetings from Vienna. You know, it was well expected, unlike the last meeting of OPEC on November 27th, when opinions were very divided about what the cartel would do, and they ended up shocking the market by refusing to cut. This time, they telegraphed really well that there would probably be no change in the target of 30 million barrels a day, and that's indeed what they did. Some countries are uncomfortable with that. They would have preferred that the Saudi Arabia cut some of its production, but the way OPEC works, you have to have a consensus to change policy. So if just one of the 12 countries objects, nothing changes. So the best prediction going into today was nothing would change, and nothing did.
This fight for market share that we've seen play out for several months now, do you see it continuing?
I do. I think this is going to be a long and drawn-out battle. But it's not just between OPEC and U.S. shale oil companies. It's often discussed that way or depicted that way in the media, but it's really not so much that. I think it's more an issue of intra-OPEC divisions. The main issue here at the OPEC meeting and at the two-day conference at the OPEC seminar preceding the meeting was Iran's determination to quickly recapture its lost market share once sanctions are lifted, in which many people expect will happen later this year. So you've got Iran that's looking to come back and increase its production, and it insists that OPEC make room for it. And you have Iraq, which has been able to increase its production strongly, and you have Russia, which is outside of OPEC, but very much on the minds of many of the Gulf producers like Saudi Arabia. Russia's at an all-time high post-Soviet Union in production. So I think the quieter but the more relevant competition is among these countries. They all are producing the same grades of oil and selling it to the same folks in Asia, such as India, but also China and other places in Asia. This is where I think the real competition for market share lies.
You know, when we're talking about so much of oil coming to the market, you mentioned Iran, and, you know, we do seem to understand that I think the number of idle rigs has been diminishing over the past couple of weeks as well. So obviously it seems that U.S. drillers are still pumping oil. If there's so much of oil coming to the market, should we expect another major slide down?
You know, there is a raging debate among barrel counters and oil market analysts about just that point. Some folks think that the slowdown in U.S. rigs and CapEx and the increase in demand, and particularly in the United States, but also even Europe, is going to be enough to sort of put in a bottom in oil prices here and allow them to go up. And so this view holds that we've seen the bottom in oil prices. But there is another view, and it's well subscribed, and it's a view to which I adhere to. And that suggests that U.S. oil producers are going to be more resilient than many people expect. That so far we haven't seen a decline in U.S. production, that they're getting lower costs, they are improving their efficiencies, and they're likely to surprise on the upside. Meanwhile, with OPEC countries producing well above 31 million barrels a day, well above the target, and that there is a sort of a tsunami of crude that's developing out in the world, and that eventually should trigger another leg down. So there is a debate about that. There's very strong opinions on both sides, and I guess we'll see this summer who's right.
You know what? Tsunami of crude sounds music to my ears, and purely because of vested selfish interests. We pay a lot of money for importing all that oil here in India, and it's very heavily taxed. But anyway, Bob, thank you so much for giving us perspective on the market and how we can expect it to move from here on.